Welcome. You're watching Countdown right here on BloombergQuint Live. Let's quickly run you through the headlines before we take a quick look at what the markets are doing. Markets are off today's highs but remain in the green. The Nifty continues to cool off from 12,100 levels. Most sectoral indices trade with modest gains. Yes Bank is the top gainer on the Nifty today. The lender will have a board meeting on Friday to consider fundraising activity. RBL Bank jumps to its highest level in 2 months. The bank is planning to raise about 1,500 crore rupees through a share sale. That's a BloombergQuint exclusive. And the Nifty Metals Index is the top sectoral gainer today, with Hindalco, Vedanta and Hindustan Zinc amongst the top gainers. Neeraj, good afternoon. And it looks like it's a day of consolidation, you could call it that, because we've really not seen any big bang moves post the record highs that we made.
Yeah, yesterday there was a bit of a scare, and we recovered from that scare for the bank Nifty yesterday itself. And in today's session, I think the banks are again showing the way. Though I must say that at the start of the trading day, the banks were getting outstripped by the large caps, but the banks are now holding okay. The Nifty intraday will show you that it's come off a little bit from the levels that it was trading at. From the highs that it was at, it's definitely come off. So it's not, but consolidating within a tight band. The turnover would have picked up a little bit because it's the F&O expiry. So the F&O volumes will certainly move up. The cash market volumes too at 24,000 crores, not all that bad. Get in the heat map and show you what's moving and what's not. And the quantum of green has almost remained the same. The constituents have changed though. Larsen & Toubro, for example, is down nearly 3%. So that one has corrected quite strongly. Some losses for Cipla. Bharti Infra continues to languish. Stocks like NTPC and ICICI Bank is in the red today. So that's the key thing. But what's done well? Yes Bank up 8%. The commodity names, Ultratech, Hindalco, Vedanta, Coal India continue to move. And today's session, without exception, I think the auto names have by and large maintained the gains. Even in the current point of time, Tata Motors and Maruti Suzuki are amongst the names, but then the Bajaj Auto as well, which is in the green. So autos seem to be painting a reasonably okay picture for themselves. What about the broader end of the spectrum, Devina?
More mixed bag, Neeraj. So the mid caps and the small caps have been dilly-dallying over the last few trading sessions. And today's session also, small cap index is trading in the red, while the mid cap index is marginal gains in today's trade. But a few stocks that we've got to keep in mind, one being Prestige Estates. Now they're foraying into the hotel space. They've signed a deal with Marriott for about 1,000 rooms. That stock's up about 3.5%. REC, PFC are two stocks in focus on the back of that the government has told them to lend closer to $1 billion to power distributors. In terms of RBL Bank, that whole issuance and to raise money to the tune of 1,500 crores has kept that stock active, but not at the highest point of the day even for an RBL. Other stocks on the move with Jeevan Financial Services. Now that we know that the first week of December, that's the time that you will see the issue open for Jeevan Small Finance Bank. The stock is up about 4.2%. Lemon Tree is the other one. Remember, the FII activity in the September quarter really picked up in Lemon Tree. The stock too is active about 3%, and Eclux comes back into focus with gains of about 4.5%. Stocks losing out include the likes of Dish TV, ITD Cementation, that sees profit taking after a few days of continuous gains that you've seen on the back of big orders coming its way. And Lakshmi Vilas Bank is down as well, about 4%. Other stocks on the back of volumes, Equitas for one, on the back of what Jeevan Financial Services is doing, is up about 4.5%. Volumes of 46 times the last 20 days average. You've got Credit Access Grameen. There's just the most recent news that's come out. The stock's up about 1.8% on the back of volumes 20 times the last 20 days average. And L&T Financial Holdings is up about 5.5% with volumes of 27 times the last 20 days average. But crucial to know what's happening in the futures and options space. Tomorrow is the November series expiry. Agam Vakil joins in for more details. Agam.
Well, what we're seeing right now, Devina, is a little more accumulation, and the accumulation in the futures was a little more about a couple of hours ago as against right now. But we must also remember that that was in the November futures, and we are seeing more and more addition towards the December futures on account of rollovers, which for the Nifty stands at around 49% now. In terms of the Nifty banking futures, the rollovers again standing at around 42%. So they both have picked up on expected lines, and largely also in line with the previous 3-month average. Of course, we have an hour left, well over an hour left for today's session to go through. So I reckon we will have these numbers which will be higher. But moving on to your wicks, that's come off further by 1%. What about your options snapshot? Let's take a look at that as well, and the way things are panning out. So it's 12,000 mark, not much has changed there. Let's take a look at the change in open interest, because that will be interesting to see where we are seeing accumulation, and it is a 12,100 put, surprisingly, given in spite the fact that the Nifty is below that mark. Of course, we're going to continue to keep an eye on these levels, the 12,000, the 12,100 calls. But Yes Bank is right at the top of the list, considering the accumulation that we've seen towards long, especially in the December futures. Moving on from Yes Bank to another finance company, we have Ujjivan Financial, which is also gaining, and fresh longs across in the December and the November futures. Besides these two counters, we also have Biocon, which is in focus, of course, on account of the US FDA approval which has come through for one of its drugs, and we're seeing longs there. And TVS Motor Company is the other one from the auto space. Don't forget, we have a handful of names, large cap names, also doing very well in the auto space, and TVS Motor Company is seeing further longs at this point in time. So on the whole, certainly turning out to be a reasonably good day of trade for a handful of counters. Let's wait and watch whether or not they can hang on to these gains.
Ragam, thanks very much for that. So that's the futures and options snapshot that we've got this afternoon. Keep a track of all of those counters that were mentioned. Let's also begin the show with a market voice. Bhavin Shah of Sameeksha Capital is joining us right now on the show. Bhavin, thanks very much for taking out the time. Give us a sense of what kind of advice are you giving to clients at this point?
Well, the way we invest, we tend to look for bottom-up opportunities. And I think there are opportunities are there in the market at this point, although even with fairly rich valuations in some segments. So I think we continue to stick to that approach, and we advise investors to if they have patience to deploy money in that fashion, and then that is the best way to go about it. We also have observed that over last 3 years or so, index funds have outperformed most of the large cap funds, and it's becoming increasingly impossible to predict which large cap mutual fund might outperform an index fund. So, we believe that every investor should have an index fund in their portfolio as a way to play large caps.
Okay, but just the fact that we're at record highs, Bhavin, does a staggered approach make sense? Or, the push for the markets right now, there's no trigger that can be in negative, because we've seen the US equities also on a continuous basis making record high after record high. So the momentum is there. So one rather not miss out.
Well, yeah, see, what has happened is, if you look at India in particular, it would have made perfect logical sense to really sell down on equities post the budget. And that's what happened. However, I think, the way this government functions, they take a decision, then they see what happens, then they get feedback, and then they take corrective action. So while in my view, they have made a lot of mistakes, at the same time, they keep correcting them as well. And so it is prudent not to be out of the market, because, if I had done the logical thing, which is to really reduce my equity exposure post budget, I would have, probably missed that big uptick that happened on the day of the corporate tax cut announcement. So I think that is that is the reason. And the other thing is, when you look at the current interest rates, and when you look at the revised tax rate, if you factor that into basically a equity yield versus bond yield equation, the market is not cheap. It is in our calculation, one standard deviation above the average on this metric, but it is not at the kind of a peak level in that respect. And I think that is probably the same reason why US market also has has kind of been very strong, apart from obviously improvement in trade war issue. this very fact that the interest rates are very low, I think it keeps playing a big role in the market.
Bhavin, Neeraj here, good afternoon. Where is it from amongst those well-performing pockets do you foresee an earnings momentum that could keep valuations elevated? We hear that for financials, there is skepticism about what can happen to some of the other pockets. Where is it within the spaces that you track where you see earnings momentum continuing for at least the next 2 years, if it's possible to predict that?
I'll have to really, think hard on that. But I think you are right about financials. I think we are also starting to see some momentum in the, healthcare, for example, in the hospital space, where I think the capital intensity has come off. So, companies are starting to focus a bit more on profitability. So we are starting to see some of that operating leverage that particular type of companies have starting to kick in. I think beyond that, I think it's really going to be depending on the specific companies in each industry where they enjoy a particular type of advantage, whether through cost or pricing power. Those but I think it's difficult to make an across the board statement on that. Beyond that.
Okay, let me try and ask this to you. A lot of arguments come in for how, because of the higher ROIC that some of these consumption names would enjoy, the higher multiples will stay. People may be skeptical, but those higher multiples will stay if they manage to grow at the same pace at which they are growing right now. One, is that a legitimate thing? And if so, would it be staple companies like HUL, Dabur, etc., which will continue to find that favor? Or would even the other leg, the likes of paint companies, for example, which are Berger and Asian, etc., which are trading at higher multiples, would also continue to stay at those elevated levels?
See, I think what has happened is all these companies you mentioned, they've benefited from one common thing, which is the tax cut. So that resulted in a bit of a valuation reset for them. And I think people may get mixed up on that versus and then obviously earlier to that there was that GST change. I mean, the introduction of GST, which actually favored the companies that you mentioned. Now, I think how long can tax cut is a one-off. I think that's kind of factored in by the market. GST benefit probably still continues sort of that market share shift towards the organized players. But I think beyond that, it's there is I suspect that if the overall economy, if the economic recovery starts to take hold and the opportunities emerge in relatively more cyclical businesses, then money may shift towards that, and these stocks may actually underperform because, I think valuations are definitely absurd by, I think by any stretch of imagination. You can forecast till 2050 and, basically plug in the realistic volume growth till 2050. India becomes as developed as China today in 25 years. You build in all those assumptions, and I think you will still not find value in those names.
Okay. It looks like, some of the cyclicals are really picking up pace. Metals as a pocket is, a lot more active than it was a few months ago. And there are key triggers as well that's coming about. But do you see things, taking some more time to pick up materially on ground with the domestic demand, pricing once again coming back in? Obviously, all of that dependent on what happens with regards to the trade talks. But is this a space to be in, to have exposure in?
I don't think I can talk about metal, but I think overall on a broader picture, what I can say is, one of the root causes of what has happened in India has been the credit, availability, right? The slowdown in credit, the whole, crisis was started with IL&FS. Now, if there are some signs, I think government, I think it also really pushed that agenda hard recently with, a fair bit of increase in, loan, basically loan approvals and so on. I think the credit growth was slightly better in the latest data. So I think if that picks up, I think that is probably going to be the key factor that will drive the broad-based economy. I think, and you can look at, for example, a very specific, if you look at the rural economy, for example, with a good monsoon, good reservoir capacity, I think the confidence in investing, could increase. Tractor, for example, could be one segment that picks up a bit early. So things like that, I think, and then it starts to spread. So that's how I would think about it.
Okay. What about IT? Of late, it's a bit sluggish. Not much has been happening out there. And probably for some time now, high teens kind of growth is something that has already been factored in. What would your take be?
I think it's still a good sector to have some exposure to, especially if it finds stocks that get beaten down for sort of very flimsy reasons, like what happened to Infosys. I think it is still not fully recovered to where it was trading before all that whole thing came out. Similarly, there could be some other opportunities, for example, in names like Mindtree maybe. But so I think overall, the sector continues to have a fair bit of strong sort of factors helping it grow at probably less than 10%, I would say, not even high, low teens. But at the end of the day, there is very high dividend payout from many of these companies, and I think you still have 3-4% kind of dividend yields on these stocks, and then there is some bit of growth, mid to high single-digit growth. So it is a good, it is a good sector to have some exposure to in a portfolio. It may give 10-12% return perhaps on an ongoing basis, but I think there is a fair bit of confidence in terms of the fundamentals of those companies.
One question, Bhavin, at least final question from my end. While we talk about a bunch of others, there is a sector which is hitherto been neglected, but 2019 has seen it do well, and that is real estate. And a bunch of portfolio managers as well that we've spoken to in the recent past seem to suggest that with the advent of RERA, there might be a meaningful shift in the way in which some of the larger organized players stand to benefit and gain market share from the unorganized, and therefore that will show in how these companies perform over the course of the next 5 to 10 years. Do you have such a structural long-term view on real estate?
I think it's a reasonable conclusion to draw based on what has happened in other markets. I think real estate has been sold in a very haphazard way in our country for a long time. I think acts like RERA obviously try to address that, and I think availability of finances and all obviously becomes key. I mean, there is still a fair bit of availability of cash or black money in the market, which still seems to be helping some of the second tier unorganized, quote unquote unorganized developers. So I don't see the shift. Maybe right after demonetization, GST, that time frame, one could have perhaps felt that maybe we are really moving away from a cash economy. But to be honest, to be fair, I mean that is not the case. So while RERA does increase the level of compliance, I think developers beyond those big names who want to do projects and who are otherwise good in terms of execution are actually getting money. So I mean, I think that shift will probably happen, but perhaps less gradually. I mean, less quickly than maybe some people think that it will.
Okay, got that. Great chatting with you, Bhavin, this afternoon. Appreciate you taking out the time and joining us on BloombergQuint. Well, on to a BloombergQuint exclusive then. RBL Bank is looking to raise 1,500 crore rupees within a week through share sale. The bank recently concluded roadshows for the same. Yatin Mota, he gets us more exclusive details. Yatin.
Well, Devina, sources do indicate at this point in time that RBL Bank is all set to raise up to $200 million via equity issuances Of course, this 1,500 odd crore QIP as well as preferential issue is likely to happen in various stages. Now, sources do indicate that the company or the private banker might go for a preferential allotment to select investors first, and then might look at raising funds via the QIP. So essentially, this is nothing but a mix of preferential issue as well as a QIP issue to institutional investors. IDFC Securities, what I'm told, is the lead banker as far as the entire transaction is concerned. Now, if you look at our calculations, a 1,500 crore share sale at the current market price would mean a dilution of close to 9% on a post-money basis. And more importantly, once the fundraising is done, the capital adequacy ratio is likely to jump by nearly 2 percentage points. As of 30th September, RBL Bank's capital adequacy ratio stood at 12.3%. And in the latest conference call post the quarterly earnings in Q2, the bank's management reiterated that they would like to close the fundraising exercise before the fiscal end. So probably in the next 1 week or so, what we gather from reliable sources is that the company is all set to launch its preferential issue, and post which the management will take a call on the QIP accordingly.
All right, and it's at a 2-month high already. The stock today is up about 4.5%. So it's not the high of the day, but it's still got good gains, about 365 on the stock. Watch out for that one. The other one to watch out for, obviously, we've got the medium-term earnings visibility is what is driving Motilal Oswal to retain its bullish stance on Colgate Palmolive. Agam Vakil, he's standing by to take us through the fine print of why Motilal Oswal likes the stock. Agam.
Well, Motilal Oswal has retained its buy rating on Colgate Palmolive, but it's also placed a price target of around 1,815. That means a 20% return per share potential from current market levels. Reasons here is that, well, Motilal Oswal believes that it's poised to post strong earnings growth in the medium term. Moreover, it has inexpensive valuations even at these levels, which could bolster an upside return potential. The brokerage firm believes that the Colgate's market share has remained stable over the previous few quarters. I mean, there hasn't been as much intense competition. They have a direct reach where it's reached, in fact, it's grown around 30% over the last year. Premiumization is back in focus now that we have a new head leading the company, and there's been no material down trading witnessed in Colgate too, and that's the other reason behind which, well, the brokerage has retained a buy rating and also placed a price target 20% higher from current market levels.
All right, got that. And probably though it still is expensive, but in the pack, one of the better valued stocks. Thanks, Agam, for that. The stock, remember, in the month of August was trading somewhere closer to 1,100. From there, you've actually seen the stock picking up closer to 1,500 now, but it's somewhat consolidated at this point. Last 3 months, the stock's been up about 23%. Moving on to another brokerage call then. Morgan Stanley is expecting large lenders like ICICI Bank to begin a supernormal profit cycle. It even expects a 50 to 100% upside over the next 2 years for ICICI Bank. But do other brokerages share similar sentiments? Shefali Malik is here with an analysis. Now, Shefali, ICICI Bank has already run up quite a bit, but I guess Morgan Stanley is just super optimistic.
Well, yes, they were already optimistic, and from that level also they've gone up a little more. Their earlier target price was about 665, and from that level they've actually raised it to now 775. So what I've done is I've actually picked out a couple of parameters across brokerages and tried to compare and figure out why they are so bullish on ICICI Bank. So the first metric is the operating profit CAGR. They expect the operating profit CAGR over the next 3 years to be around 22%. Macquarie, I couldn't figure out the data from their latest report. It wasn't available, but I'm assuming that it must be lesser. And Nomura expects around 18% PPOP CAGR over the same time period. And then after that, after making the operating profits, then it comes down to provisioning, after which you get the profit figure. So I've picked out the credit cost assumptions. So for FY21, they are assuming credit cost to be around 95 to 100 basis points, whereas for Macquarie, they are a bit on the higher side, 115 basis points. So probably that explains to a certain extent lower PPOP assumption and higher credit cost assumption. So probably that's why their overall target price is a little lesser.
For Macquarie and the others, as compared to Morgan
for
Stanley.
Macquarie. Nomura, again, I could figure out that figure, but I mean, considering that their overall target price is lesser, so it's a deduction that I've done that, you know, some of the metrics might be on the lower side. Then ROE for FY21, the Morgan Stanley expectation is about 17%, and Macquarie is that of 14.4%, and Nomura is 15.4%. So return on equity also, Morgan Stanley is assuming that number to be a bit higher. Price to book, Morgan Stanley 2.4 times, Macquarie is almost similar, Nomura 1.9 times. And the reason why I've picked up Macquarie and Nomura for comparison is because after Morgan Stanley's target, the next highest target is that of these two firms. So that is why, and below that the target goes below 600, you know, late 500s. So that is why these two firms, so target price for all three, Morgan Stanley 775, Macquarie 615 and Nomura 610.
It's interesting because Morgan Stanley, I think that their last uptick of target price was just a few days ago, like 10 days ago or so, when they bumped it up to 665, I believe.
I actually don't remember that. When it was the last.
I mean, no, so
it was Macquarie few days back because they raised it to 615. Morgan Stanley, I'm not sure.
So it's in a very short duration of time that they're getting extremely.
Yeah, I don't know if you remember the chat that we had with Anil Agarwal of Morgan Stanley as well, wherein he, according to him, he mentioned that the fact that in a falling interest rate scenario, though I know the scenarios are very different now after the external benchmarking, but in a falling interest rate scenario, certain banks are by and large able to hold on to their NIMs. And the assumption on credit costs falling is universal. Now, I'm just wondering, what is the credit cost assumption for some of the other private sector banks, Shefali, out here? Because there is divergence of about 20 basis points between the assumptions of Macquarie as well as Morgan Stanley. What about the others like Axis or some of the others?
Well, from what I remember reading, for that of ICICI Bank, it's on the lower side in comparison to some of the others. And it's interesting, they were even, one of the notes was even comparing, in fact, Morgan Stanley only was comparing the PPOP growth to that of HDFC Bank. So it has lagged that of, for HDFC Bank, if over last one decade, the average has been around 20-22%, whereas for ICICI Bank, it used to be around 11-13 odd %. So from that level onwards, it's now expected to match that of HDFC Bank. Wow. So, and the credit cost assumption is lower than some of the other ones which are in the similar league, such as Axis Bank and others. So that is why there is so much of
and it's favorably valued also. I guess it's not as expensive as it's
that I don't think it'll ever be. But the question is, has it moved up quite dramatically compared to what it used to be? As a valuation multiple?
It has not. In fact, it has lagged some of the other retail. In fact, even in terms of valuation, it has lagged the other major lenders like Axis and.
I thought a few days back we did this chart which showed that ICICI Bank for the first time is more expensive than Axis Bank.
Yeah. Yes.
It was chart of the day.
Partly it was because of the weightage increase on the MSCI index, but other than that as well, a lot of other metrics are now looking better, or at least that's what the expectation is. Amongst a couple of brokerages, that going forward ICICI may even outperform that of Axis, because Axis, again, to a certain extent, the corporate NPA issues do still exist, and there is some amount of uncertainty there. So probably a bit more weightage is being given to ICICI Bank.
All right, Shefali, thanks very much. In fact, ICICI Bank, as I look at it, from May to September was in an extremely tight range of 20 odd points. I mean, it kind of capped itself around 400, and from September, mid-September to end September onwards, that's the time that rally started. And you've seen how the stock has actually performed from there onwards. Obviously, you have the additional funds coming in from MSCI, but nonetheless, 507. 775, so that's a really lofty target.
Wonder what the ANR function suggests and just the kind of return potential, because Morgan Stanley is as bullish as it can be, but the others would be interesting. The consolidation of what most of the other brokerages.
So there is still an 8%, 8.5% return potential on the ANR function. Yes, on average. There are 98.2% in terms of buy ratings that have come in from 56 analysts who track the stock. One analyst has given a hold rating, and there is not a single sell, 0 sells on the stock.
Can I just request my producer before we move on to also pull up the ANR of Axis Bank? These two are being spoken about in tandem, and ICICI Bank still on an average has an 8% return potential. I wonder what's the case with Axis Bank. It'd be interesting to see that because the last few days ICICI has outstripped Axis. Out here too, the return potential is about what, 9.9%, so not too dramatically different from ICICI Bank's return potential.
Still has 2 sell calls though. Versus 0 of ICICI Bank.
But okay, that was an interesting piece of analysis on ICICI Bank and Morgan Stanley's assumptions versus the assumptions of some of the other brokerage houses. Okay, before we move further and full tilt towards the trading wheel, it's also important to look at one more pocket, and that is cement. And very interesting conversation that we had today with N. Srinivasan of India Cements. The Andhra Pradesh government's decision to review the construction projects is key reason what is hurting the cement players in the southern region, according to him. The cement giant is not so worried about its businesses in Western India, where N. Srinivasan sees demand picking up enough to sustain higher prices. Listen in.
India is 4 or 5 Indias. South India is different from Western India, different from North, Central, and East. Now, as it appears now, the situation in the West, North, and Central India, the demand is good, capacity utilization is high. Where the East is concerned, the rate of growth of demand has slowed, but is expected to pick up. As far as the South is concerned, there has been a capacity overhang, but still the last year the capacity utilization was about 79 or close to 80%. This year first quarter was good. It is the second quarter post the election that when some policy decisions, particularly if you take Andhra, Telangana, in Andhra all construction literally came to a halt. One, because of a lack of sand. Second, because the government said that we will re-examine all projects. As a result of which, all project construction where the government is involved, the dams, etc., came to a halt. So I think that has to revive. That period has to pass, and the demand will grow again. That is the difference. You see, the difference is primarily led by Andhra, Telangana slowdown, of which Andhra is larger. As far as Tamil Nadu and Karnataka are concerned, they have been reasonable. I mean, they really had any major glitches. The demand, for example, in Andhra and Telangana put together was about 31 lakh tons per month. That dropped to 14, 15 lakh tons. So that was something that could not be easily absorbed by the industry. That put a lot of pressure, but I think that going forward from the next quarter, I think that will also ease.
Mr. Srinivasan, since you mentioned Andhra Pradesh, I just want to follow up on that. So what is the situation right now in terms of demand revival? When do you see that happening? And then what happens to the region as a whole in terms of the excess capacity that's there? Demand likely to look lackluster for this period, at least for the upcoming year, or do you see a material change there?
See, we must look at it quarter-wise. This third quarter, Q3, is generally a weak quarter in the south. So therefore, the demand picks up January onwards, so which is what we are looking forward to also. But as far as Andhra is concerned, see, there are two types of, one is the private sector house building demand, which is, I think, continuing. It is the huge infrastructure demand that was there because of the dam projects, housing for weaker sections, and a whole host of things that the government was involved in, which spurred demand for cement. That has slowed down. So we have to wait for that to pick up. I think the government has to get over whatever inquiries that they are doing, etc. So we are hoping that it is not the intention of government to slow down. The government wants to get on with it, but they have some issues, political issues, which we hope that they sort out, and in which case demand will pick up from next quarter on.
Till then, pricing will continue to remain under stress?
Pricing generally is always under stress in this third quarter. Not stress, little bit. I expect that next quarter onwards, the pricing will not be a problem.
Okay, so sir, if I see the pricing scenario from, I believe in the month of March, cement prices on average were 385. They're down to 305. May not be a right comparison because a number of factors have played out. But is there an extent of uptick that you believe could go up to when you're saying that prices could be normal?
See, if you look at the south as a whole, in Tamil Nadu and Kerala, prices have not, there not been much change. Prices have held.
Okay.
Karnataka almost, it is only Andhra, Telangana that the prices have dropped because of the sudden drop of demand. Maharashtra a little bit, I think Maharashtra prices are likely to recover. Rest of India, if you take west, north and central India, prices are very stable. East, there has been a slight drop. So if you look at India as a whole and take 5 Indias, then I think some parts of South India, some parts of East India have been affected.
Well, that's, of course, N. Srinivasan of India Cements. Now, last 50 minutes of trade left, full tilt towards the day's trade. I think we're doing okay for ourselves. Just quickly get the Nifty gainers up once before we get to our experts. I think Yes Bank is piling on the gains, up about 8%. But if you can just get the top performers on the index, these are the top contributors, and HDFC, Kotak, Maruti HUL, but just amongst the stocks which are doing well, I think you will see that there is Yes Bank, there is Ultratech Cement, HCL Tech and a few others which are doing very well for themselves. So not a bad afternoon of trade. Manav Chopra of India Bulls Ventures with us on the show. Ruchit Jain of Angel Broking also joining in. Gentlemen, both of you, good afternoon. Thanks for joining in. Manav, let's start off with you first. What's the trade on the index currently? Are you taking one, Nifty or Nifty Bank?
See, looking at the indices, both are very well placed. In fact, Nifty has managed to see a breakout above its previous resistance of 12,050 and is managing to sustain above those levels right now. And in spite of that volatility, we have seen on the intraday basis also strong buying that has been witnessed at the lower levels, and also for coming expiry there has been a good amount of put writing at 11,900, which definitely indicates that the biases have been shipped upwards, and the earlier support of 11,800 has now become a higher base at 11,900. So overall things are looking very well placed. I believe the only thing that is missing is the follow-on move. So once if the Nifty manages to see a decisive break above 2150 and we are sustaining above that, I sense we could start with a good move on the upside, which could lead us towards the levels of 12,400 to 12,600. This would eventually happen in next couple of weeks. For Bank Nifty on the same side, there is strong support at 31,500, and we've seen a good amount of rally already come in Bank Nifty. So the chances of it continuing on the upside towards the levels of 32,200 to 34 on the upside is what we are keeping our target of close to 32,400 levels, and we believe the private banks and the PSUs are something which are likely to continue its outperformance, and PSUs have already formed a strong base and is likely to see a breakout. So PSU basket from the Bank Nifty would be something that we are watching very closely.
Okay. Ruchit, what's your call on the index now?
Hi, very good afternoon. Well, probably we have seen a breakout after a consolidation phase in Monday's trading session, and if we look at the broader markets, then the broader markets after the breakout have been doing quite well. I think there are a lot of large cap names which are still witnessing an up move with good volume, so this is a positive sign, and hence we are expecting this momentum to continue towards 12,180 first, and once 12,180 gets crossed, 12,290 could also be seen. Banking space is expected to show some outperformance. If you look at this series, this entire series, the Bank Nifty has already been been showing a decent outperformance compared to Nifty, and even if you look at the derivatives data, then there have been good long positions formed in Bank Nifty rather than Nifty in this November series. So we are expecting that this momentum, this outperformance would continue going ahead. So just for a day or two before tomorrow's expiry, if one is to take any trade, then Bank Nifty 31,900 call option, which is right now trading around 90 rupees, that could be bought with a stop loss below 40 rupees for target around 145 to 150.
Okay, and stocks, Rochit?
So I have a couple of buy recommendations. If you look at stock specific moves, then there have been good volumes in the pharma space recently. So one is a buy call in Lupin from the pharma space. The stock has given a breakout from a falling trend line resistance yesterday. And if I look at the volumes, then the volumes were quite good on this breakout. So we are expecting some momentum towards 845. So short-term traders can buy Lupin with stop below 767 for target of 845. And ACC is my second recommendation. Primarily, if you see the cement space has gone a good under consolidation in last 1.5 months, and now many of the stocks are trading near the support. In fact, if you look today, Ultratech, ACC, Ambuja, some of these large cap names have shown good volumes in morning first 1.5 an hour. So we are expecting some momentum to come back in the cement space. ACC can be bought for the short term with stop below 1462 for target around 1570.
Got that. Manav, you also got two buy calls. One is TVS Motors and the other is HUL.
Yes, my first buy call, like mentioned, is TVS Motors. In fact, from this auto segment, we have seen this stock already witnessed a good amount of rally from its important lows and has breached its important resistance level. And recently, after a good corrective decline from its peak of 500, it is again forming a higher base and formed a higher bottom. It's currently trading above its short-term averages and confirms a short-term bottom in place. We recommend a buy into this with a stop loss of 450 for an upside target of 510. My second buy call will be on Hindustan Unilever. In fact, the prices are bouncing from its oversold levels, and since the prices are already in a structured uptrend and are trading above its long-term averages, any good retracement near the support levels are often a good opportunity to enter long positions. And since the prices are also bouncing from its daily and weekly support levels, we recommend a buy into this with a stop loss of 2040 and expect an upside target of 2160.
Okay. Anand Tandon joins us right now on the show with his stance of the fundamentals. Anand, good having you as always. Thanks much for taking the time out. Anand, we're seeing this the spate of brokerage notes which are coming out are all talking about how there could be substantial upsides on some of the stocks which have already rallied. I mean, Motilal Oswal on Colgate, Morgan Stanley on ICICI Bank, HDFC. I mean, it wouldn't raise eyebrows if indeed there was a 20-25% uptick on the target price over a period of 1 year. But MS, for example, says that they wouldn't be surprised if there is a 50 to 100% upside in an ICICI Bank over the next 1 or 2 years. Similarly, on a stock like Colgate, which has already run up quite a bit, Motilal Oswal expects another 30% uptick from the current prices. What gives here?
Well, I think, frankly, the market is leading the analysts. At the end of the day, we are having money coming into the market. Market continues to rally, and therefore you have to find stocks that can justify a higher price. Now, within the stock universe, there aren't that many that are doing well. So those that are or have some chance of actually showing earnings growth. And for example, ICICI is clearly one of them where, because of the base that it is coming out from, you would expect to see, almost all corporate banks, you would expect to see profits increase substantially. There is a reason to kind of keep changing the valuation upwards. I don't think you should worry too much about the target set by the brokerages. At the end of the day, that is mostly reverse fit. The real important question is that which of the ones are the ones that are likely to show you earnings growth with some degree of certainty, and more importantly, in case there is a shock which is adverse, which are the ones that will not leave you looking somewhat foolish, and therefore you are looking at somewhat safer bets going forward.
All right. Anand, what's your view on real estate, particularly on the likes of prestige estates, which have been doing good so far in their own space, but now looking to diversify, signed a deal with Marriott, for about 1,000 rooms. And then on the other hand, you have a Godrej Properties, which has done absolutely nothing in the last month and a half.
Well, companies like Godrej Properties are already very fully priced for whatever they have on their portfolio. So there's no particular reason why they should continue to move up. Frankly, if you are looking at a turnaround in real estate, especially basis the kind of measures that the government has announced, then you should be looking at the beaten down stocks which are which have been whacked out of shape, because that's where the delta can be the highest. That said, from an investor perspective, if you're not looking to try and maximize return, but looking at the risk return kind of profile, obviously the longer term story in real estate remains in two parts. One, the lease portfolios that companies are beginning to set up and which have to, in a couple of cases, become REITs, or even otherwise where there is a commercial real estate. A lot of companies are now trying to put it out in a kind of quasi-REIT situation. And the other where the housing on the housing real estate, where the real question is, do you have the brand equity to be able to get into slightly asset-light models where you're getting into development contracts rather than having to buy the property, and where your brand name ensures that you're able to collect money before the project is complete. So those are the two themes that one should be working on, and clearly the first one is now, I think, well discovered. The real estate, residential real estate still has to pick up. So, if you take an advanced bet on that, then clearly there is some upside that may be possible. Some of the smaller companies, again, in real estate with good brand names probably offer some value. The frontline companies, are now going to be dependent more or less on their projected NAV growth.
Okay, got that. State Bank of India, that's at about 337. The DRHP of SBI Cards got filed today. The stock's up about 0.5%. Remember, both SBI and Carlyle will be selling some stake with this issue. However, on the charts, does it have the capabilities to take down 373, which was its July high, Ruchit?
I think yes, probably if we look at last 3 or 4 weeks, then within the PSU bank, firstly, SBI being a heavyweight, it has taken the leadership to take the Nifty, even the Nifty PSU bank higher. And the high top, high bottom structure can clearly be seen on the daily chart, and the recent corrective move also get arrested around its 20 days exponential moving average. So the near-term trend continues to remain positive, and looking at the price volume action, I think the recent highs of 370, 373 should at least be tested very soon.
The stock, though, in the last 6 months is still negative, but the recent rally has just happened from the month of October, so may not really show up on that. About 18% in the last 3 months. Coming to some of the other names, I think today a stock like Tilaknagar Industries, they too are looking to raise funds. I think 100 crores odd is what they're looking to raise by preferential issue. The stock actually was up by about 16% and then came down. But yesterday also saw an increment of about 15%. So the last 2 days, you've seen the stock moving up closer to 30%. Do you track this one, Tilaknagar Industries, Manav?
See, I've seen the charts of Tilaknagar. Overall, the prices have not seen any, on a larger scale, it has not shown any big moves. Overall, if you're looking also on a very short-term perspective, the price and volume is showing, for the near term at least, the prices would consolidate, and eventually, in case if we see a base building even at the current levels, then probably we could see some sort of a momentum rally. But at the current levels, I believe that looking at the overall structure, even at the oscillators, it's better to avoid this stock and eventually reevaluate it once the stock comes near its important support levels.
Yeah, I think there's some more news floor aside from the fundraising, in that it has approved its one-time settlement with SBI for a loan of about 290. They're going to make a one-time settlement of 102 odd crores with SBI. So that's probably keeping the stock more active, and I think it's back to the high point of the day now, 16.7 for the stock. Let's talk about some of the other names there. Then within the, Anand, talk about these divestment candidates which have suddenly fallen off the grid.
Anyone in particular you have in mind?
No, just the entire PSE basket, like the public sector enterprises, be it a BPCL, be it a shipping corporation, Concor, any of these names.
So I think, BPCL, for example, is going to be a complicated deal because it will have to be in multiple steps. They've already announced that they will have to be divesting the Numaligarh refinery. probably for strategic reasons. They have gas assets in BPCL, which probably also may be bid separately. And then, of course, you have the refining and the retailing assets, which probably can go into a third basket. So overall, I think the value realization for the government can be very substantial, but for the retail player from here on, for the investor, it is very unlikely that though you will get a large chunk of dividend flow possibly, the overall gain from here may not be very substantial in my view. Largely because of the way that the parts will fall. So government will make a lot more money, both from the point of view of divestment as well as the taxes that will be incurred because of the way things will be sold, which is probably the reason why it's kind of taken a pause here. For shipping corporation, actually, I don't understand what the excitement is. There may be some real estate which I'm unaware of, but otherwise the ships are nothing great. They have no great contracts to go back on. And the company is overstaffed as always. So therefore, what is the excitement in shipping corporation kind of beats me. Concor, again, to me, it appears to be a company on deputation. The real estate, the property largely is owned by railways. The wagons are owned by the railways mostly. The land is owned by the railways. The people that are in the company are on deputation. Once it becomes privatized, the way that the contracts are structured between the railways and Concor itself will become contentious. You are not going to get the same level of smoothness with which the deals can be struck today. So yes, Concor is very high value company. There is no question about that. But whether it will remain the same value in the private hands is a moot point. So one has to look at how all of these final structures emerge before you can put a real value for all of this. Which is what I think the market is now beginning to realize, that it's easier said than done in terms of divestment of these companies. And remember, these are the better companies. When you get down to the loss-making ones, the only thing that you really will be looking for is real estate and the cost of retrenchment of the people involved and the trade-off between that. So it's still going to be a tough ask. And the other point to note is that the government has never shown an ability to actually do very large disinvestments of many companies in the space of a few months. So with 4 months remaining for the rest of the year to go through, how much will actually come in this year itself is a question mark.
Okay, I just put up an AB Capital also just to see how that stock's been doing. And ever since the Z deal announcement, the stock had actually seen quite an upturn in the stock price for 2 or 3 straight days. I think now it's just about cooled off a bit, silent actually. Picked up from the lows of the day, but just about 1% or so right now at 109. Manav, AB Capital, is there a trade here?
See, the stock actually, after a good series of decline, has seen a good bounce from its deep oversold levels and is showing some early signs of a trend reversal. Definitely the prices are also trading above its important resistance level, and we have already seen a very good amount of a good volume and price breakout on the weekly charts. So I believe on the lower side 105 and 102 would act as a very important support and a cushion in case of the prices witnesses a short-term decline. Looking at the current momentum and the fresh breakout, I sense in the near term the prices could see a short-term momentum rally to continue on the upside and eventually see levels of close to 120 in the near-term perspective.
Okay. Well, Anand, this whole Carvey issue, do you think it will drive sentiment or even business towards the more established broking names? It's not a business that's really done remarkably well, but it's a large brokerage which is having or facing an issue.
Well, I think brokerages per se is a kind of difficult business to be in, and certainly Carvey's imbroglios don't help. Will it drive business towards more established names? Almost certainly. Today, you don't want to have a situation where there is even the slightest issue in terms of whether your demat accounts are safe or not. And if the allegations that are being made actually turn out to be true, it can be very damaging to the market overall. Not just to the broking community, because that will mean that you really go back to perhaps bank-backed brokerages and so on, which will essentially mean poorer service, more expensive brokerages, and therefore hurt the retail investor even more. Net, it's the industry continues to suffer from overcapacity. It continues to suffer from lower and lower margin. The only thing going for it is that the asset base continues to grow, but the yield on the asset is also continuously falling. not a very attractive business, and things like this obviously will lead to further consolidation.
Okay, Anand, the other question that I have is something that we spoke about extensively today, and which is what happens to investments in a Bharti Airtel, or if you are a big risk taker, then Vodafone Idea too. If you have an assumption that ARPUs over the course of the next 2 years would trend upwards materially, do they, amidst all of this volatility, still provide you an investment opportunity?
So, there was a report recently by Kotak saying that if you don't get an ARPU of 200 bucks, 200 rupees at the minimum, the companies are going to have a difficult time. Now, that's a very, very material increase that you're talking about. And it's very likely that if the three companies get together and decide to push it up, that you will end up having to pay for it. The numbers are humongous because you're talking about each one of them having a few 100 billion minutes of usage, and therefore, if you were to put a floor price, for example, on a per minute basis, automatically the kind of ARPU increase that we are talking about will come through. Is that enough to actually take care? Well, the fact of the matter is that first, they have the problem of the existing debt. Second, they have the problem of having to make profitable returns. And third, you still are struggling with the fact that, sooner or rather than later, this 5G thing will come along, and then you may again have to overbid. Till that bidding war doesn't become more rational and people don't suffer from the issue of having to catch large amounts of bandwidth and then lose money on it. I don't see how the sector can become, can generate economic returns, let's say. You may get profitable, but whether you'll generate economic returns on your capital, to me, appears to be a few years away. That said, because of the delta, the fact that you're going to get hopefully an increased price for the company, profitability at least may mean that the business becomes more sustainable. I'm not surprised to see that the prices of these stocks have started to move up. I don't think it is worthwhile taking a bet on Vodafone Idea, largely because of the fact that neither of the two promoters are showing great conviction in terms of backing the company. And without that, by raising prices alone, I don't think it's going to be adequate. So you are better off trading Bharti, if at all.
Okay, so that's the word on telcos from Anand Tandon. Okay, Anand, one final question, at least from my end. Any thoughts on the internet-based businesses? I think we had this conversation last time around as well. I don't know if you've got a chance to look at the competitive advantages of the moats, if they do have, in the likes of Apple or the others, which are new age businesses in that sense, without too much of competition in a niche area, but the valuations are sky high.
Not actually, Neeraj, I haven't looked at that.
Okay, but appreciate your time, Anand, today. Thank you so much for being with us and giving us your thoughts. Really appreciate your time. That's Anand Tandon with his thoughts. Speaking of niche businesses, just a couple of chart checks before we hear out one more voice. One of them is on Delta Corp. That stock over the last few days has had more up days and down days, and currently is trading at 218, another 5.5% higher. Bring up the 1 month chart on the 15. I mean, you'll see, I think over the last 15 days, it's had some material gains. 1 month is about 11%, but it's essentially in the last 15 days that from those lows, it's gained quite a bit. Manav, it's coming out of a bit of a hibernation of sorts. Delta Corp stayed sub 200 for a really long time, now finally making these moves. Do you like what it is doing on the charts?
Yes, in fact, we have seen these prices being in a very volatile range since past 3 to 4 months, whereby it has tested even 150 and multiple times tested 200 and retraced back. This is after a good time that the prices are seeing a decisive break above the levels of 210 and is likely to close above those levels. So going forward, it will be very interesting for the stock in case if these levels continue to hold on. Chances for this a fresh momentum rally to continue on the upside, and this breakout, we've seen last 3 days volumes have been very good. In fact, it has been trading above its above average volumes, and definitely there has been an increase in delivery percentage. So overall, it looks good for a near-term play. In fact, on the upside, we see next levels of close to 235, 240, and this is likely to be achieved in next few weeks. So that would be another hurdle to look at. But one thing for sure, that the stock has formed a very strong base at the levels of 205 and 210, and it's unlikely to be breached on the immediate basis.
The other stock that is doing very well of late is Tata Global Beverages. In today's session as well, it's just inched up in the last few minutes. And somebody was telling me about how, if you look at the September quarter numbers, Tetley globally has started doing much better. Starbucks, the operating level numbers have started improving a bit. And the business is looking slightly different than what it was in the last few quarters. Now, don't know if this is the advent of N. Chandra and his focus on some of the companies where he can make some changes. Doing this or no, but Tata Global Beverages has certainly fundamentally had a good run, and I think even if you look at the last few weeks performance, it's probably not done all that poorly. So 306, okay, I stand corrected. The last one was just about 10%, but still that 10% gain on that base is not bad. 3 months about 15% for a stock which usually used to be a very, very dull stock.
Yeah. And talking about other few gainers, we just highlighted Tilak Nagar. I think that stock's up 20% now. So
wow.
It's just bumped up and closer to 20% for Tilak Nagar after the news of that one-time settlement. The other stock that's also doing okay for itself today is GMR Infra. That too, after an extremely flat morning, the last few minutes has seen some interest that's come in. So about 12.5 million. That's at the high point of the day for GMR at 21.20. That's what you've got in terms of individual stock moves. But moving on to our special series, that's Bulls Interrupted. We spoke. Rather, Neeraj again spoke to S. Narain of ICICI AMC. He speaks about the growing polarization in Indian markets and why small and mid caps deserve accumulation at these levels. Listen to a slice of the conversation with S. Narain.
Initially it was fine, but in my opinion, polarized markets do cause stress. And the more and more time that polarized market remains polarized, the stress goes up on an exponential basis. So I think as fund managers, we go through stress at this point of time because of this polarized markets. Because very often people say such polarized markets, after they become polarized, people say will keep on continuing. So I remember the late 90s, people used to think TMTs was the only sector. You never needed cement, steel or any of the other basic sectors. If you go back to 2007, people felt that all you needed to construct was roads. There was no need for cars. And today people believe that there is only need for the top 10 companies in India and nothing else is needed. So these things can't last. But while they continue, they cause agonizing stress to fund managers, rational investors, and that's part of the job. Otherwise, investing would be very, very easy.
Yeah. So how do you, as somebody who's probably seen a lot of these, deal with such situations? I mean, yes, you're managing public money. A lot of people would be managing their private money too. But the approach would be the same, right? Because I'm sure you feel as hurt if the portfolios are underperforming as an individual investor would be. How do you approach such a period of time? If I'm not saying your portfolios are underperforming, but say if a portfolio is underperforming, how do you approach your investing and your mental traits in such a scenario?
So first, our portfolios are underperforming because the reality is, if you're in 2007, if your portfolios outperformed very handsomely, most of the persons who outperform very handsomely, they lost their jobs. So I believe that when markets are irrational, you have no choice but at some points of time to say, no, I won't participate in this kind of valuations. So I think it is very stressful, and the only hope is that in all asset classes, irrationality doesn't happen at the same time. So if you look at what has happened to me as a CIO, in 2017, we were pretty careful in many of the NBFCs and housing finance companies on the credit side. And that madness ended, and this year has been a period where we are taking happiness not out of quality stock investing, where we are anyway underweight, but we take happiness out of the fact that we stayed away from a lot of absurdities in credit markets, and that has helped us a lot. So maybe 3 years from now or 2 years from now, we will take happiness from the fact that we, at the peak of the quality cycle, we stayed cautious, and we would have stress at that point of time that we were too cautious in credit in 2022. So I think that's the beauty about cycles. You have cycles operating in different asset classes at different points of time, and that gives you hope. That you actually hope that you don't have irrationality in all the asset classes you are involved in. Like for example, the small and mid cap irrationality ended in 2017. So we are taking happiness from that fact that that absurdity is gone, and now we move to the other model of recommending SIPs in small and mid caps, because small and mid caps are no longer very overvalued.
Okay.
And now they are fairly valued and they justify accumulation at this point of time.
And you can catch the entire interview and read excerpts of the interview on BloombergQuint.com. That's the story for you on our website. Back to the markets then. Let's find out what's made it to Sharad Dubey's list of the Fab 4 stocks this afternoon. Sharad, good afternoon.
Good afternoon, Devina. The first stock is Credit Access Grameen. The stock is up more than 3.5%, and this is its highest level in a week after the board, given an acquisition of almost 76.2% stake in Madura Microfinance for almost 666.4 crore rupees. So this transaction is subject to approval from RBI and SEBI. But the management itself, they sounded very confident, taking the market of Tamil Nadu as well and increasing their clientele base. Up next is Lemon Tree Hotels, which is up 3.3% after almost 1.4% stake of has exchanged in trading sessions, and apart from this, that's almost 1.08 crore shares. Up next is Equitas Holdings, which is up almost 4.5% after we have seen fresh longs with a high open interest of almost 31% and volumes trading at almost 1.5 times its 20-day average. The street expects that the Equitas Small Finance Bank might be listed in the BOSES soon. And the next stock is CIMEC, which is up almost 5.4% after it has come up with it has deployed its vessels, for subsea for a charter of almost $4.86 million, and this charter is expected to be there for 180 days in the Mumbai onshore offshore activities. Back to you.
All right. We'll watch out for some of those names. Thanks a lot for that, Sharad. That's the mid-cap end of the market, which should be kept an eye out for. In the last 5 minutes, I think we should also keep an eye out for what's happening to autos, because they're climbing even further. Hero MotoCorp up about 0.5% in the last few minutes of trade. Maruti consolidates gains and moves higher as well. So there's some gains that are coming in to some of the auto majors and the larger auto names in the last few minutes of trade. Before we get in, next fundamental guest, Yogesh. Manav, just come in. Are you doing a BTST of sorts on any of the auto names? Today they've been strong throughout the trading day, and now they are trending higher. They are looking like closing at the high point of the day. A Maruti, for example.
Yes, absolutely. Yes, if you're looking at the chart for Maruti, the prices on the weekly time frame definitely indicates a trend reversal, and on the daily charts, we have already seen a corrective decline and now a short-term breakout from its support level. So clearly indicates that the overall trend is getting established on the upside, and it's a good opportunity to even buy the current zone. It has strong support levels at 7150 on the lower side, and that is one range which is likely to hold in the near term. We expect this momentum to continue on the upside and could see a near term rally and test its recent peak of close to 7700. That will take an eventual time, but the short term targets can be placed near 7400. And the other stock that I had already recommended in the start was TVS Motors. So both these stocks could see a near term good momentum rally on the upside.
Yogesh Mehta is with us as well of Yield Maximizers. Yogesh, do you reckon that there is some traction in the auto names ahead of the November auto sales numbers? Today they have held fort very strongly.
Hi, Neeraj. Good afternoon. Since auto was languishing for a prolonged period of time, and we have seen some good numbers in festive season last month, I think that may continue. And the second thing is, now when all the sectors have participated in this rally of almost from October to now in just 50 days by 1,100 points in Nifty, then if you're looking at finding some kind of a relaxation and growth kind of a fund allocation to those sector, then auto and pharma, these are the two which are being remained out of this fancy so far. I think in the two-wheeler names, Bajaj Auto and Hero MotoCorp both are available at hardly 15, 16, 17 times P multiple, and the growth rate for BS6 transition and the electric vehicle transformation will have some additional impact on that, and that will be a positive for them. I think at this level, one can have a brave-hearted call with this. One can get into these names for a good upturn, uptick from here. And definitely one should remain invested, or if not, they should start looking at it.
Okay, SBI, I think, has moved up now. So the stock is at 344 right now. And you've seen the sudden gain that's come into the counter after having an absolutely flat day of trade. Would you probably think of going long on this one, Ruchit, for a trade to hold on for the next coming few days? I mean, tomorrow's expiry, obviously, so you're going to keep that in mind. But, just to hold on to that trade.
I think yes, certainly the short-term trend still continues to remain positive, and the kind of momentum even the RSI is showing, we believe that the stock would head higher first towards the target of area of around 360, and once 360 is crossed, the earlier highs of 375, 377 could also be seen. So certainly at current levels also, I would say that if one is looking from a short-term perspective, one should look to get fresh longs with stock below 327.
Whirlpool, I think, is the other one that my producer tells me has moved up quite sharply, 7% higher in today's session. Not a very heavily traded stock, but nonetheless active. Manav, you track Whirlpool?
Yes, in fact, the prices are trying to form a base around the levels of 19 and 20 on the lower side. Overall, we have seen the stock being in a broader sideways trading band, but for any trader, I don't see any opportunity into the stock, even though the prices are trading in a band of 19 and 25 on the upside. This is the broader range that the stock is likely to trade in, and so even looking at the formation at the current levels, I wouldn't want to recommend this stock since it's in a still sideways trading zone.
Whirlpool, and this whole set of consumer discretionary or consumer durables, Yogesh, by and large, they have not had a bad quarter. Which amongst these companies stood out in terms of the results, and is there a stock from this pocket that you would go out and make fresh investments in?
Neeraj, particularly from the white goods consumer discretionary, I would prefer not to allocate any funds at this point in time, rather to avoid. Though the valuations are not at a stretch valuation, but the growth, it seems that will be a tepid from, say, varying from 3% to maybe 7-8% on the higher side. Even Voltas, we have seen the numbers were not so encouraging this time, but even the outlook remains bleak. Even after there is the new law which will be amended from 2020 or 2021, where the new star formation will have a 6 to 7% price hike into individual products. But I think all these names like Blue Star, Whirlpool, or the Voltas are on a very high value multiple, so would avoid at this point in time. And this is the season, it's a seasonal business, and in the summertime it is always a Q1 and Q2 are better, and Q3 and Q4 are tepid. So second half would be a tepid one, I expect that, and I project that. So I'm not looking into this sector at this price.
Okay. RBL Bank is the other one that is, I think, at the day's high. Remember, we got you that exclusive BloombergQuint story about fundraising activity. 1,500 crores is what they want to raise. The stock's up 6%, 367. You really don't know the pricing at which they're looking to raise that money, but the market seems to be pretty optimistic, at least for now, on the stock. What about some of these private banks, Yogesh? What's your take on them?
In private banks, I think there is a lot more opportunity still lying there. Even we've seen the MSCI rebalancing where ICICI has gone like crazy with the hefty volumes. But the way RBL Bank was hammered down from Q1 numbers and the Q2 number from 550 or to 265 to 270 levels, this QIP news will show some kind of a ray of hope for this company, and probably the asset, the write-off of the assets and the liability side, they've already done that, and partially, which is not still, which is unknown, but whichever is known, they've reckoned that, and they've already provided the provision for that. I think at this level, at 360, 365 odd also, it provides a cushion for Q3 and Q4 numbers as well. It may not drag down. I don't expect it will drag down like Yes Bank or the DHFL kind of a story, but management is quite confident, and that poised confidence for the healthy balance sheet for the company. I think again we can see maybe 1.5 year down the line, 450, 500 levels again on the cards. And on the private sector banks, again, Yes Bank is in the news, and 29th is the fundraising meeting they have, and probably they may announce that point in time. At 68 rupees, again, all the negatives are priced in. I think book value would not be materialized at this point in time for Yes Bank particularly, because we need to see whatever the negatives were there. And now the main criteria and the preference would be to raise capital to have a healthy loan book growth and stable asset quality on the balance sheet side. I think the new management, Ravneet Gill, it would be a good opportunity again at this level of 65 to 68, though it would be a high risk kind of my investment. But I think that 95 to 120 would be the target for Yes Bank if one has some patience and risk appetite.
Okay, got that. Just stay on with us, gentlemen. Lots more to discuss with you. Get your, your strongest idea so far in terms of what you're positive on. But that's in a moment from now. Let's also take a check on what the dealing rooms are recommending this afternoon with Yatin Mota and Darshan Mehta. They both are joining in with their channel checks. Good afternoon, guys. Darshan, let's start off with you.
Yeah, so one of the sectors in which dealers are extremely bullish at this point of time, given the positive commentary that's coming in from the US, from China, is the metal space, and Vedanta is the one in which dealers are indicating. It's seen very high volumes of almost 80 lakh shares as of now. Vedanta, compared to the other peers, has actually massively underperformed. You've seen counters like Tata Steel and JSW Steel recently outperform, but they believe the entire metal space over the next 10-15 days will be active given the commentary that's coming in. Vedanta, due to the underperformance, is something that's been preferred at this point of time. The other stock that dealers are talking about is Torrent Pharma. It's up almost 5%. Over the past few days, the management has been meeting a lot of analysts. The commentary that's coming out is extremely positive in terms of growth in India, Brazil. They're not too concerned about the growth, about the warning letters that have come out in the US for the US related plants. So the commentary is positive. It's up almost 5%. And ABB is the one in which dealers indicate that there is a little bit of fund buying that's happening. Dealers indicate that there is fund shifting that's happening from Siemens to ABB. So that's something that dealers are talking about. Over the past few days, once the analyst commentary that came out from Siemens did indicate the fact that FY20, the balance will be soft. They won't see that much traction, while ABB came out with strong commentary. So post that numbers, there is a gradual flow from Siemens to ABB, at least on the capital goods space. But Yatin has a few more stocks.
So Apollo Tyres is one stock, and in general we have seen some traction coming in for auto ancillary names. So this is one stock wherein dealers are recommending a BTST kind of a strategy. So watch out for Apollo Tyres. Yes Bank. Remember, the futures are in the ban, period. Given the fact that the open interest has exceeded 90% of market-wide limit. So a lot of short covering is seen as far as Yes Bank is concerned for trade today, almost trading at the day's high. Watch out for Yes Bank. Dealers do expect some furthermore short covering to happen. And Ultratech Cement is another stock wherein domestic funds are said to be buyers in trade. In fact, right now the shares have spiked up. So on an intraday basis, Ultratech is something which is trading at the highest point in the day.
Oh, good going there. Thanks a lot for that, Darshan, as well as Yatin. So two names out there. One of them is Ultratech. We'll get a technical view there. The other one is Torrent, on which the Bank of America Merrill Lynch note in the morning suggested some of the points that Darshan was talking about, and that stock is trading 4.5% higher in trade. Fundamentally, first, Yogesh, have you looked at Torrent Pharma? Do you like this one?
Torrent Pharma, so far the growth was a concern and now from FY20 to 21, we will see a good base effect and jump into that. And EPS may rise by, say, from 56, 57 this year, FY20, from 40, 43 last year. And that will drive some kind of valuation is at stretch still. And even if I see that the growth rate for the next financial year would be around 20%, then also the valuations are around 24, 25 times. As I mentioned that this provides this opportunity in auto as well as healthcare is there, where some kind of valuation comfort should be there. But Torrent Pharma at 1800 rupees, I would say the risk reward is favorable, but though I don't see much higher side from current level as I see in Divi's Laboratories or in Biocon or in Lupin per se, where valuations are equal, same between 22 to 23 times P multiple. But Torrent will have some more upside. Headroom is still there, and probably we may see 2000. I don't deny that, though that looks very strong.
This morning, that Bank of America Merrill Lynch note spoke about how India and Brazil will lead the show, and the US may stabilize at the current levels for Torrent Pharma despite warnings coming in. And the India business will see new launches contribution rising as well. And of course, Brazil would have some deliveries coming in. Now, all of this probably leading to Torrent Pharma doing what it is doing today. 4.7% higher in trade, really strong show. On the charts, Ruchit, Torrent Pharma, and I would want to ask Manav about Ultratech, but first, Ruchit, Torrent Pharma.
The thing is, if you see, this week in Monday session, the stock had shown a pullback move from its 200 DMA support, and that pullback move now has been carried forward, and the swing high of 1860, 1870 has been breached with very good volumes. So technically, it is a positive sign. A high top, high bottom structure could be seen, and I won't be surprised if the stock continues this up move towards 1950 or even 2000 kind of levels in very short term.
Okay, and what about Manav? What about Ultratech?
Yes, the prices after a good sideways consolidation has seen a good breakout on the daily charts, and it has also managed to see a break above its both long-term averages. Siemens as a pack today, Neeraj, both has seen a good move out from its weekly resistance level. So the most important thing to look out is going forward whether we will see the follow-on move. Seems likely, at least for stocks like Ultratech and Ambuja, at least for the near term, since there has been a decisive breakout with volumes and addition in open interest. So on the immediate basis, Ultratech could see a upside of at least 4 to 5% on a very short term, but in the medium term perspective, we do expect targets of 4,500 plus.
Okay, what about closing strategies? Mana, let's stick to you first.
Yeah.
Yes, I will be going with the cement pack. My closing strategy would be on Ambuja Cement. In fact, this is one stock which has seen a good decisive break from its 10 days range high. And post this breakout, we could see a good momentum rally coming on the upside. Recommend a buy into this with a stop loss of 198 for an upside target of 212. And my second buy call would be on Tata Global. In fact, this stock too has been in a strong uptrend, and there has been a breakout on a 60-minute chart with above average volumes. A strong support at 304 on the lower side. Recommend a buy with a stop loss of 302 for an upside target of 320.
Okay, what about you, Ruchit?
I would recommend going long on DV's Lab. Well, within the pharma space, if you see, the stock has consistently shown a good outperformance in the recent past as well. And with new highs getting touched in this stock, the volumes are also quite good. So one can go long from a BTST perspective in DV's Lab with stop below 1770, expecting target around 1875.
Okay. Now, one stock that we want to show a chart of, and one stock that we want to show the move in. The move in Godrej Properties, if we can pull up that stock, and it's been, slightly skittish, but yeah, just a bit of a pull up in the last few minutes of trade. To watch out. Is this the start of a move out here, Manav? Ruchit, Godrej Properties?
Yes, within the realty space, the stock, if you look at historical data, then certainly this stock has shown a good outperformance. But in last 1.5 months, some correction has been seen, and the stock has now approached its 200-day moving average. Prices are consolidating near its 200 DMA since last 4-5 trading sessions. 920, 925 would be the crucial resistance range, and in case if it gives a breakout tomorrow above 925, then I think it would be good. There would be a good trade setup to enter fresh longs. So I would place a conditional bet, go long on Godrej Properties on a breakout above 925.
Okay, and Here's the chart that we wanted to show. Lupin, apparently it's made this inverted head and shoulder pattern, which usually works very well for stocks in general. And Lupin in particular, the last few days it's been doing okay. I think Ruchit already had a buy, but this is the pattern that we wanted to showcase for Lupin. Do watch out. This marker, that the yellow marker that you're seeing is the region around which, if you can just take the camera closer to the pattern on the right hand side of the screen, that's the pattern that we are trying to show, wherein there is an inverted head and shoulder pattern coming in for Lupin. Manav Chopra, you want to come in on this one? How does it look on the charts to you?
Yes, in fact, I would call this more like a complex inverse head and shoulder, wherein the left shoulder has multiple shoulders and the right shoulder for the formation has only one. So usually a complex head and shoulder formation is something which needs a little more confirmation. It has definitely seen a break above its neckline of 765 and is trading above its long-term averages. The only thing is that the yesterday's candle was a shooting star. So in a nutshell, we still need a confirmation, and that would come once if we see a closing above 800. The volumes quite look decent enough, but on the lower side, I recommend that one should maintain a bound dips approach with a range of 760 to 780 is the important support areas. And once if we see a close above 800, we could see the upside momentum rally towards 865.
Yogesh, did you have a chance to look at the two IPOs that everybody's talking about, Ujjivan as well as the SBI cards, and would you have a recommend on either of them? Okay, I think we're just missing out on the audio from Yogesh, but do keep that at the back of your mind. These are the, two new things that people will be watching out for. By the way, just before we start wrapping up, must talk about stocks which are moving up. You know, talking about SBI, which is now at 345, up 3%. BPCL is the other one, which has moved up in the last few minutes and now at 508 or 509. So SBI is at the highest point of the day. BPCL is up about 2.5% too. So keep that at the back of your mind. Both of these names very, very interesting. Okay, Yogesh, I think we have you. So very quickly, the two IPOs that are slated to hit the street, do you have a recommend on either of them?
SBI card so far not gone through the details, but I think it will be one of its kind of IPO and would be should be a hit into this in this kind of a market where everybody's running after the financial names, and this is a big name, the second largest card name, and the profitability is also skyrocketing since last 2-3 years, and the opportunities is very robust. Post HDFC Bank, this is the second number SBI card with the largest territory and the reach. So I think it would be a good opportunity for SBI to encash into and get some more strong asset, the balance sheet. So that is driving the stock prices recently, and the SBI card would be a greater opportunity for investors as well.
Okay, Yogesh, we'll leave it at that. Thanks much for taking the time out and being with us. Really appreciate your time. BPCL moving up in trade. We've discussed SBI, but BPCL is important as well. Manav, BPCL, after a few days of corrective moves, is starting to inch up, closing in almost at the high point of the day. Tomorrow's expiry, would you risk a BTST, and would you do it for the current series or the new series?
See, I will avoid BPCL for a simple reason that the stock is already seen a prolonged rally. Definitely it is bouncing from its support levels, but overall it's in a sideways trading band. It has stiff resistance at 510 and 515 on the upside, which is coincide with its early resistance level. So I believe unless the prices don't exceed 515 on the upside, I wouldn't expect any momentum rally or any trending action into the stock. In fact, the stock could see a sideways consolidation move. So keeping that in play, I think I would avoid taking fresh longs in BPCL.
Okay. Other stocks which are active include Royal Orchid Hotels, which is up about 8%. Godfrey Phillips, we already spoke about 6%. HEG, after a while, is showing a movement, so do watch out for that one. And I reckon with this move in PI Industries, it will be knocking at fresh highs for itself. 1471 and counting. Very good move in this one. Last quick thoughts here, Ruchit, on PI Industries.
The broader trend has been positive for the stock, and after a consolidation, it seems that the stock has resumed its uptrend. If you look at today's volume, it's higher than what we usually see on a daily basis. So I think 1550, 1560 is on the cards very soon.
Okay. Gentlemen, let's start wrapping up the markets and we'll come back to you for your final thoughts. But here's how the markets are shutting shop and shutting shop well, I must say. Maybe we should have taken a final thought on the index as well, because the index is just doing so well. We are ending at the highest point of the day, but we'll take in time, take a view after the markets have shut. But good close for the markets today, which is very, very important. And I think the broader end of the spectrum too would have done okay. The mid-cap index certainly has 0.77%. I don't know about the market breadth. We'll identify that because the small caps haven't performed, but the mid-caps have done well. David, now we'll speak about that. Let me talk about the large caps first. Yes Bank, 8.5%. Ultratech, 3%. But the star mover of the day has to be State Bank of India, up 3% on close. Maruti, Hindalco, ONGC and BPCL show that there is some traction within the PSU oil and gas names as well. What is not doing well? Bharti Infra down 3%, Cipla 2%, L&T, ITC, NTPC are amongst the others, and ICICI Bank about 0.7% lower in trade today on the day when they got a big upgrade. Axis Bank too ending in the red, but these might be temporary factors. They might well recover in a day or two. Devina, what about the broader end of the spectrum?
So there was a marginal recovery that came about in the broader end of the spectrum as well. So from the small cap index, which was in the red and when we started off the show, it's managing to close, in the green by the end of it. So you can see that move that's come about even in both the mid caps and the small caps. Stocks which have moved strongly. Tilaknagar Industries for one, saw a pretty volatile swing. Actually went up 16% and came down to 14%, and finally closing the day on upper circuit there about 17.25. Lots of news for one-time settlement coming in there, fundraising activity coming in there. So 2 days on a trot, the stock's done really well. Godrej Properties, the entire day had a downward bias when it started, but towards the end of the trading session finally shut shop with gains of 1%. So you can see that big straight vertical rise that the stock saw in the last 9 minutes of trade. HCC continues to do well. You've got the stock now up about 2% by the end of the session, but the last few days have been exceptional in terms of the gains, double-digit gains coming in on a daily basis for HCC. Tata Communications will also see double-digit gains by the end of trade today, so closer to 20% upper circuit, and that big pop that you saw in the dying moments of trade. Godfrey Phillips, 2 days in a row. Whirlpool is the other one. Volumes are a little thin, but the pricing activity is sharp. Godfrey Phillips is up about 6.5%. PI Industries, L&T Fin Holdings, 2 straight days the stock has done well, and it looks ripe according to most technical analysts for a slightly bigger upside as well. Volumes have supported this pricing activity on the stock, 4.6% higher. Indiabulls Ventures is active today, and eClerx continues to do well along with Torrent Pharma. Torrent Pharma, I think there's a brokerage upgrade that's come in on the stock, and the stock's active. By the end of the session, you'll see Torrent Pharma with gains of about 4.5%. What's losing? Dish TV, I think second or third day in a row where you've seen a slump in the stock, and it's down about 6.5%. ITD, the cementation, is the other one. It's made its run up on the back of the positive order flows that have come in, and now profit taking on the stock is leading it lower by about 5%. Inox Wind sees profit taking. Yesterday the stock was up in double digits. JM Financial, MTNL also profit taking here on the counter, and then JSW Energy, which looks weak by the end of the trade today. So not bad going at all with regards to the late afternoon trade, Neeraj.
Yeah, not bad going at all. And I think a lot of bulls would be heaving a sigh of relief, because yesterday we had that scare, Devina, but today I think
rest assured.
Yeah, it's a bit of a rest assurance of sorts. And it's not been a bad week, I must say. Since we've closed, if you can just pull up this week's chart, the 3-day performance or something, because a lot of fears about how there could be increased or heightened volatility as a result of the political situation, the expiry week and the GDP numbers, which are expected to be weak, 7 days. But look at this, Monday, Tuesday and Wednesday, I think we've had a decent enough move on the index in a week which was expected to be largely volatile and not the one of gain. So it's not been a bad first 3 days.
You're still anticipating volatility come tomorrow, because that's
and day after ahead of GDP maybe.
Yeah, so that's tomorrow is actually the bigger watch in terms of volatility and what happens thereof. But today's session, let's quickly look at the contributors as well and what led to the move on the index. Banks obviously did well, but HDFC Limited, Reliance Industries, propping itself a little higher. I'm actually not sure what the price it closed at, because when we're tracking the 10 lakh crore mark, I don't think it's got there yet.
Not at all.
But SBI and that final move that came about, so Reliance Industries, I think, okay, it's 2 points away from the 10 lakh crore mark.
Maybe tomorrow.
Let's wait and watch whether it does it tomorrow or no. But the last, as you can see there, that too saw a sharp move towards the end of the trading session.
Yeah, good moves there. It's gotten everybody by surprise. 9.98475.
Just 2 points, 2.5 points away.
Yeah, this should be interesting. Any which ways. Okay, post closing about 1569 or thereabouts. Nevertheless, and then the market breadth. I'm interested in that because the small caps didn't participate today, though the mid caps and large caps did. But yeah, we held on. Second day on a trot now, wherein the market breadth is ending marginally positive. Yesterday it was firmly positive. Today I think marginally positive, but this is not a bad sign at all. Well, let's see how this sets us up. And that would be my question to both of you. Manav, to you first. Based on what we've seen today and the slight recovery that we saw from the lows yesterday as well, do you think the banks have it in them to take us higher tomorrow?
Yes, it looks like, in fact, we've already seen a good amount of data today that, we've seen there has been aggressive put writing around the levels of 31,500 to 31,400, at least in the Bank Nifty, which also indicates that, there is a strong conviction that the expiry would definitely end up on the upside, and there was enough call unwinding witnessed at 31,800 to 32,000 levels. So I believe in last 1 hour there was some short covering that also propelled the markets higher, and like I mentioned earlier, it would be the PSU banks which could actually add some more move for the Bank Nifty going forward. So looking at the closing of SBI, I sense at least in the near term this could see a good bump up on the upside. So will not be surprised to see a sharp move that we can expect for the Bank Nifty tomorrow. And Nifty, I think if the closing above last traded price above 12,100 is definitely positive. So tomorrow could be a good expiry for both the Nifty and the Bank Nifty.
Manav, we'll leave it at that. Thanks much for taking the time out and being with us. Ruchit, what would your thoughts be? Can Reliance inch higher from where it is right now tomorrow?
Yes, certainly we have seen some good momentum in last half an hour or 1 hour in today's session, and I think yes, this would take a leadership to take expiry at high levels. Another noticeable thing on the index front, in Monday's session we saw a good amount of put writing in 12,000 put option. Today another 13 lakh of open interest addition has been seen in 12,100 put, that is at the money put option. So this is quite positive for the markets. I think tomorrow it would be another day of bullishness where we would see some call writers running for cover, and this short covering move would take the markets further higher. So one should continue to trade with a positive bias. The banking space is likely to outperform. Today the 31,900 call, which we recommended at the start of the show around 90, has closed around 110, and we should see levels around 150 tomorrow in 31,900 call option.
Okay, we'll leave it at that, Ruchit. Thanks much for taking the time out and joining us and giving us that perspective. Devina, interesting day poised for tomorrow, the expiry, and we might have Reliance nudging the 10 lakh crore mark as well.
Yeah, and who knows, if it's a good day, you may see another record high on the Nifty.
That too.
As well. But with that, I think it's a wrap from Neeraj, myself, and the entire team that's put this show together. Thanks so much for watching. We've got the market wrap coming up next.
So people, when they invest and the calls go right, they're investing